Welcome back. Joining us on the show now is Kunal Shah. He's head of commodities and currencies at Nirmal Bang Commodities. Kunal, hi, good to have you. And it continues to be as volatile as ever. I mean, when you look back at this year, there have been so many events unfolding that you have seen range of each commodity actually widen so much more. But I want to start with metals. And after last month and after last week, the kind of profit taking that we've seen in the overnight markets, how are you reading it?
Well, I take it as a profit-taking itself because what you see, we've seen before China actually opening up gradually, we've already seen metal prices were up by like 8%, expecting that the is going to relax down. That is what happened last Saturday. So.
All right, Kunal, we'll try and patch you yet again. Well, but yes, it has been very volatile. And as you said, even before China opened, the conversation or the sentiment about China opening up and perhaps that demand will come back into the market itself has led the metal prices to run up a lot. And that on-ground actual demand coming back is still awaited there. But the markets clearly seem to be reacting to the US economic data. So whether it has been about the factory activity, the services numbers or the jobs data, all of that has come in much better than what the street was anticipating. Kunal, you're back with us. You were saying that, the demand is yet to come, but the expectation of demand itself took the prices higher.
Yeah, so before the China has actually started to gradually open up its economy, we have already seen metal prices have shot up. So now, since China is opening up, there is a profit-taking going on in the market. The fundamentals of metals going forward are not looking very bullish. It's just the hope trade which is going on right now. Remember, China is consuming 50% of the global metals. And looking at the way we are seeing they are gradually opening up is causing, some short covering and some fresh upside. But I'm not very optimistic going forward from the new year point of view. I'm expecting global soft PMI are definitely going to weigh on metal prices going forward. So the upside seems to be very limited in metals. So not very bullish, even though China is opening up.
Kunal, I remember you said that the kind of performance that we saw in the month of November will not get repeated in December. At best, we might see 2 to 3% of gains coming in for many of those metal prices. Do you still stand by that?
Yeah, I absolutely stand by that because the structural problem for metals is the demand. The demand growth across the globe is going to soften except few economies. We are going to see a gradual deceleration in the demand growth going forward. And that will put a pressure on metal prices going forward. The hope trade right now that China is opening up and the demand will revive is just a hope. The fact is that the Chinese economy is in a very bad state right now. And going forward, no major improvement is expected. Just a bit of cyclical upside is what we are going to see going forward. But the fundamentals don't point towards a scenario where we are going to see any major rally in metals from here.
So until the end of this year, what kind of a trade and in what metal would you want to take?
Well, I would try to go a little contra here rather than going with a major long trade. I would say copper 800, 804 looks quite toppish. That is a short for me. And you will see levels of 770 to 775 in next 15, 20 days. So I would recommend going long in any of these metals.
All right. So there could be an uptick coming in for many of those metals, but those would be good levels to rather go short than go long at these current levels. Kunal, also, what's your sense on the crude oil prices? Because we've seen an OPEC meeting come, a G7 price cap is coming as well, and the European Union export ban is in place also. With all of that happening, I think the crude oil prices already had factored that in. So even as we are looking at a weekly range of $10 to $12 per barrel in case of crude oil prices, what's your sense from here on?
Well, it's quite tricky because we have not seen any aggressive announcement by Russia because after whatever we've seen, Russia is expected to cut their production. So it's more of an ego issue for Russia rather than anything else. So once Russia decides to cut the output, we are going to see oil should shoot up. So right now, in line with the price cap, oil prices are going down. Perhaps WTI can test $75, Brent can test $78, $79. But beyond that, I see Russia may take a very strong stance and may cut the production by 1 to 1.5 million barrels, which would eventually lead to rally in oil prices. So not very bearish from these levels, expecting a production cut from Russia. That is our viewpoint.
Okay, Kunal, thank you so much for joining us. And Manisha, thank you so much for taking us through that conversation all about commodities on Halftime Report. But with that, it's a wrap on this show. Stay tuned. Business Lunch will take all the action ahead.